Okay, recording this video on Sunday, the 11th of February 2024, just gone 3:44 p.m. Chicago time. Do hope you are doing well. So, first of all, Happy New Year to everybody. Gong Hei Fa Choi, I believe, is the expression. And Happy Super Bowl to everybody. Hope your favorite team wins today. I'm going to do a couple of things in this video. First, we're going to talk about the M3 MacBook Pro that I have, and then we're going to get to the Emini charts and the tick bar charts. I shall probably do a fuller video on the new MacBook Pro using TradeStation on it. Just thought I'd give you some highlights before going to the Emini charts. And apologies for the video this weekend taking so long to come out. I received a new laptop about 48 hours ago, and it's taken me a while to move everything across and get everything set up. I tend to do clean installs starting afresh rather than just copying across a disk, and so that requires me to look at everything from scratch and redo my settings. But anyway, that's my problem, not yours. So, summary, I've moved from the M1 Pro chipset of the Apple MacBook Pro to an M3 Max chip. So that's a pretty big bump in spec. And I've also gone from a 32GB RAM machine to a 64GB RAM. I was finding that I was getting RAM warning messages every other day. I tend to use a lot of tabs open on Chrome, which is not very memory efficient. Plus, I've got all my trading charts, tick bar charts open during the day, and it stresses the machine a little bit. So I felt I needed to go up a spec this version of the machine to hopefully eliminate those error messages, so we shall see. In terms of the look of the machine, it's a fantastic look. I've gone for the new matte black looking machine, which is fantastic. I don't think fingerprint smudges are going to be an issue, not at the moment at least, but I will warn you that you do notice crumbs on the chassis far more. For whatever reason, the smudges on the keyboard also seem to be more prominent, but these are minor things. The screen is fantastic, definitely feels about 10% brighter, 10% crisper, and the screens on the MacBook Pros just get better and better with every release, which is extraordinary. Web browsing also feels about 10% faster. Wasn't expecting a huge spec jump in that necessarily, but when it comes to video processing, I am expecting that to be better on this machine, but it's not been tested yet. I'll find out when I render this video today whether there's a significant increase in performance there. But what about TradeStation? So the first thing to say is I never have a problem with having TradeStation charts open during the day with data streaming in and charts being built. There's never a delay in building the chart or new data coming in. Yes, possibly when I'm opening a bunch of tick bar charts during the day session when live data is coming in, I always feel a bit iffy about doing that. I don't want to drop ticks along the way, and that's a concern for me. But that being said, running charts during a day session on a setup where you're using Windows on Parallels on a Mac OS really has never been an issue at all. The area where I was hoping I'd get an improvement is opening charts, a whole bunch of charts at the end of the day. When I'm reviewing the market, I'm looking at everything, and I'm pretty obsessive about the number of charts that I'm opening at the end of the day to see everything opening up. And some of those chart sequences that I open are very memory intensive and take a while, literally 5 or 6 minutes to open a whole bunch of charts. So was there any improvement using this latest version of the laptop? And the answer is yes and no. So turns out opening daily charts, there was no change. They're pretty fast to open anyway on TradeStation, but I saw no noticeable improvement in opening a whole bunch of daily charts all at once. So that's a 0% improvement there. Minute charts, yes, there was about a 17% improvement. So the time to open a whole bunch of minute charts was reduced by 17%. So it is somewhat quicker on the minute charts, which is good. But the biggest change was opening tick bar charts, and there I saw a 40% improvement in open times. So I've reduced the open times by 40%, if that makes sense, which I suppose is what you would expect. Tick bar charts are far more processor intensive, and you've got a stronger, faster processor to create those charts. So that was good, and I'm happy with that. But if you're expecting something that's night and day between an M1 machine and an M3 machine, I don't feel that. I feel this is a nice improvement, but I don't feel as if I've entered a new world with this new M3 Max chip. One of the nice things though this year was moving to a new install of Parallels Windows 11 on this machine, and they've definitely improved that whole process of installing Parallels, installing Windows 11, logging in and so on. There's none of this ARM chip nonsense that we had to go through a couple of years ago. The login seems to be simplified as well, so that was a welcome relief. I had a whole bunch of notes from the last time they did this 2 years ago that were totally obsolete because the installation process was pretty seamless. And lastly to say, I've kept my display settings. This will be the most frustrating thing for users of TradeStation on a MacBook Pro, is what to do about the Retina screen. The screen resolution on a MacBook Pro is double the default type resolutions that you have in Windows. So you have to select the scale display settings within Parallels, and so we're not getting the best of the screen potential using TradeStation in Parallels. It's still good, but it's not super crisp, and that's because the screen is being scaled in these legacy applications. I tried both ways. I tried using the Retina version, the scaled version, and I ended up sticking with the scaled option that's been my default over the last several years. So that's a quick roundup of my conclusions so far. Was it worth $4,000 for this machine? Get $1,000 off for returning the M1 Pro chip machine, so it's down to a $3,000 deal. I don't know, 50-50. I could definitely have continued using the M1 Pro machine for another year and a half. I don't feel at the moment as if it was good value for money, but this is more of a nice to have purchase and just keeping on the cutting edge. Anyway, so there we go. Thoughts on the new MacBook Pro. Let us get to the Emini charts. We'll roll through those. We'll see if these charts look any better on the video when you see them for the first time. So here we go. We're up above the 5,000 mark on the Emini, which we knew was psychologically important. We bust through it this week and kept going. We're up here at a close at 5,044, which is a nice number. It's confirmed uptrend on the daily chart. You can see the background is in red, which means in terms of price and volume, we're both in an uptrend. And what I'm looking for on that daily chart is that big spiky blue bar that shows the blow-off move, and that's why Better Pro-Am here is right down here. It'll be trailed up. As soon as that comes up, you'll start to see that move on the lower time frame charts, but that's going to be really important for understanding when that topping out process comes in on this daily chart. So daily chart, 135-minute chart, and there are exactly 3 135-minute bars in a day session of the Emini. So with last week we did start to see blue professional bars come in here. There they are, and we trailed our stop up nicely, which is good. In terms of blow-off activity, we don't have exhaustion buy patterns going on here. We put in pullback to end of trend on the low, and on the intermediate time frame we just keep on busting up. Keep on busting up here through these resistances. So this trend is definitely strong at the moment on the 135-minute chart. Then the 45-minute chart. Here this week we're starting to see a little bit of trouble. So we've got the Rambo patterns starting to show here up at these highs. Rambo pattern stands for a potential reversal of an amateur breakout, RAMBO, and it just means that the new highs being made by amateur activity, low volume, low average trade size type activity pushing up into those highs. I always talk about the low of the amateur bar sequence being the most important point. So this is the amateur bar sequence that leads to those Rambo patterns. The low of that is just above the 5,000 mark. So 5,000 is going to be an absolute key level. If we see that being broken to the downside, then that's not a good sign. But in terms of the background, it's in red. On better sine wave here, we're busting up still through these resistance lines on the intermediate and the highest time frame here and the lowest time frame. And yep, we put in some pullback to end of trend patterns over here, and we had a little bit of weakness from both of those, but we've just continued to break higher. We've got to go see some more end of trend patterns on the low and on the intermediate time frame here on the 45-minute chart. Then the 15-minute chart. Here we add the solid vertical yellow lines, show the beginning and the ends of the week. Look at the better momentum this week. No big swings at all. It's all around the zero line, just cruising a little bit higher. No blue professional bars yet on the 15-minute chart, so our trailing stop on Better Pro-Am is miles away. We need to see these blue professionals that stepped in on that exhaustion pattern there come out of the market at the highs. So I'd like to see exhaustion buy and blue professional up bars at the highs, and then we trail the stop up before we can say this is all over. And again, yep, we've seen some end of trend patterns here that led to weakness, some end of trends going on here, but the trend did not change. We didn't have white bars in terms of the trending system on better sine wave, and so we're still in a confirmed uptrend on the 15-minute chart. And then down to the tip bar chart. This is the 13,500 tip bar chart. So here we're starting to see a little bit more exhaustion in terms of price. We've got some end of trend patterns coming up. We've not signaled with a downtrend though, even on the tip bar chart, with the bars turning white there, so that's something to look for. And we've also got some blue professional bars come in at the end of Friday, and so we've trailed the stop even higher. So this was Friday's activity. We saw an exhaustion sell pattern going on, which just got rid of a whole bunch of volume. We bounced from there. We need to go see exhaustion buy with those blue professional bars and trail the stop up. So sounding like a little bit of a broken record, but still in an uptrend until we see those patterns. So there we go. Let's see if this cluster of end of trends ends up with a little bit of weakness. Monday, Tuesday, Wednesday this week, I'll be looking for these bars to turn white for the trending system on better sine wave to show us some potential nice little short trading opportunities. But until that comes in and the better pro line gets broken, we'll just have to wait and see. Next, let's look at the tip bar charts. So in last weekend's video, if you recall, we had a whole bunch of triple short signals showing up on a range of different charts, and yes, we did got a sell-off in most of those markets, but it lasted a day and a half. That was as much as it was good for. So I'll show you those, starting with the euro. So this is the euro signal that we had at the end of last week, and yep, definitely continued with that weakness, but got caught end of Monday into Tuesday with a whole bunch of blue professional bars coming in here and bouncing from there. Didn't get a signal because we never got exhaustion sell down there. And so the euro has started to strengthen, which is interesting. We're in a congestion zone at the moment. We need to break above this area to show that we're in a real uptrend. So I'll be looking for that first thing Sunday, Monday on the euro charts, that we get confirmation of that continued strength. British pound, yep, there we go. Our signals at the end of last week led to a nice little sell-off, and there we go, same thing. Blue professional bar stepped in on Monday and we rallied from there. A little bit of a bounce off the trailing stop here on better pro-am, and we've continued to be strong. No blue professional bars taking profits up here at the highs. So let's see again if we break out on the pound to continue this strength. Very annoying little glitch with TradeStation on parallels there. Don't like that at all. Aussie dollar. Aussie dollar, same thing. We had weakness. We had triple signal short, and we continued. And then on Monday, Tuesday, Monday bottomed here. No blue professional bars here, but when we tested into that zone, we had a U-turn here. Blue professional bars on the way down and blue professional bars on the way up. So again, Aussie needs to break out of that congestion zone. So that's what I'm going to be looking for confirmation Sunday, Monday. Japanese yen. Now the Japanese yen is looking very interesting. So here's our triple short signals, the end of last week, bang. And it wasn't until the end of the week that the blue professional bars and exhaustion sell came in, and we have a triple signal down here long. If you go and look at some higher time frame charts, some of the minute charts and the daily charts on the Japanese yen, that whole area is looking very interesting for a bounce. It's early days in terms of getting confirmation here. The bars haven't turned red at that point, but I'm interested in that for a potential long trade this week, so look out for that. And then the E-mini. Last week we had the short signal that ended up with blue professional bars here. The triple signal long came later because that was when the bullish divergence pattern stepped in. Wasn't down here at the lows, came in late, but we kept on rallying up, and we've not seen exhaustion buy at these highs, so we don't have a triple signal short at these highs yet, although it's getting overbought. Blue professional bars are in there and so on. And then 10-year notes. 10-year notes, there was our triple signal short, bang, ended up being exhaustion sell, a bullish divergence, just one or two blue professional bars down here at the lows, a weak little bounce, and we've come back down, exhaustion sell, but no blue professional bars there on the 10-year yet. So that's not signaled. Then gold. Gold, there was our short signal at the end of last week, and it just went for hardly a day, and then we bounced and it's come back up. It's still pretty weak. No blue professional bars since here, so we're looking for the blue professional bars to step in and give us an idea of what they are doing. Silver was short. We tested stair-step trade up here. Blue professional bars stepping on the retrace, bang, force it down, and we're in no man's land here on silver. Some blue professional bars at the lows, at the highs, the breakout, Not much of anything going on there in silver. Bitcoin, now this short signal, whole series of short signals last week did not work out. We just caught in that range at 43,000 and then busted up through for a strong week in Bitcoin. Crude, we never got our signals short at these highs because these stepped in the way. We had exhaustion buy, bearish divergence. We didn't crack the trailing stop on Better Pro-Am until here, and in the meantime we've had exhaustion, sell, bullish divergence come in. So the timing of that was a little bit off. We sold off, but at the lows down here on crude, wasn't blue professional bars stepping in. It was almost like a technical stop running exercise here. Yep, there was a blue professional bar coming here. We've come up to these highs. So I'm not sure if we break down through 75 on crude and then go see a proper move to the downside with blue professional bars and exhaustion sell. That's a potential there, but not sure about that. Whether there's some fundamental news that's come on crude that's just going to push this higher and we're going to go test 79 or 80. So not sure there. Look for that pro line to be broken to see if this continues. And again, there's my glitch here. That's annoying. So that's coming up more and more. Natural gas, there was our short signal at the end of last week, and yes, it kind of continued down, but we had long signals on the way down. None of those worked out, and so it's still continuing down at these lows. That was almost exhaustion sell getting the move going, so we've got to go see an exhaustion sell pattern hit these lows before that one's over on natural gas. Copper, there's our signal short mid last week, and it continued down and down. We tried to catch here midweek, didn't work out. Continued down, no blue professional bars here or here, so we've got to go see all of those before we turn around on copper. And then the ags. Corn continued down. We had signals 2 weeks ago there. Big move here with blue professional bars stepping in at those lows, so we've not got signals on corn yet. Soybeans, that didn't go anywhere. It was an odd signal because we didn't have proper confirmation with blue professional bars down here, and it's trying to bottom down here with blue professional bars at the lows. Exhaustion, sell, and bullish divergence, but we've not got a triple signal yet on soybeans. And wheat, lastly, yeah, just going nowhere. We had short signals, definitely on the retraces, blue professional bars coming in here and here, not at the lows. So it's still weak on wheat. So there we go, a little bit of everything in this video. Hope your trading is going well. Hope your team wins in the Super Bowl, and looking forward to next week's trade.